Hi, my name is David Heller. I've been a financial advisor for the last 15 years, working with clients to help them figure out ways to grow their wealth, but also to figure out ways how to protect it. And in today's video, I'm going to go over a very core staple to planning, especially on the retirement side of things. And that's what are Social Security benefits and, how do they work? Keep in mind, this is going to be like a high level video, almost like a primer. Not going to get too much into the technicals of how everything works, but it should give you a good baseline. And then we can follow up in future videos and dive a little bit deeper. So, what are Social Security benefits? Social Security, at its core, it's a government program that provides income for retirees, disabled individuals, and even survivors of deceased workers. For the purpose of this video today, we're just going to focus on the retirement aspect of it and how that works. But just know that at its core, Social Security is not meant to replace income in any way, shape, or form. It's just meant as a safety net to help you for retirement. And this is typically funded throughout your working years by the taxes that you pay into the program so that you can ultimately receive them when you get out into retirement. Okay, now just like a quick background and history about Social Security and how the program came into existence. And, the program is overseen by the Social Security Administration, which is part of the United States Department of Health and Human Services. It was created in 1935 when the Social Security Act was signed into law. It didn't start paying benefits until 1940. The system is primarily funded by payroll taxes, which are paid by employees and their employers, which we'll get into in a minute. And in 1983, Social Security benefits became taxed. So, how does Social Security work? Social Security is funded primarily through payroll taxes, as we were discussing before. And this is collected under the FICA tax, which, if you look on your pay stub, you'll see a line item for the FICA tax that was collected. So both employees and employers each pay a payroll tax of 6.2%, or in aggregate, 12.4%. So that means that in total, each covered employee has 12.4% of his or her wages that are paid into the Social Security system. To be eligible for Social Security benefits, you earn credits as you're working and paying into the system. You need to earn 40 credits to start qualifying for retirement benefits, which is usually equated to roughly 10 years of work. Now, for the calculation of benefits, just to keep it simple, your benefit is based off of your highest 35 years of earnings. So when you earn those 40 credits, again, usually the 10 years of work, you're then eligible to receive what's called your primary insurance amount. Your primary insurance amount is the monthly amount of retirement benefits that you'll get in retirement based off of your full retirement age. So, what is your full retirement age? If you look at the chart here, it will show you what your full retirement age is based off of the year that you were born. So if you were born from 1943 to 1954, your full retirement age will be 66. If it's 1960 or later, it's age 67. Now that we've gotten the historical and the whole background of how the Social Security program came into existence, how it works, now the question becomes, and we're into the fun stuff, which is, when should I start actually taking benefits? And before I go into any of this, I would suggest consulting with your financial advisor, a financial planner, or even a CPA to help assess this. There's a lot of different philosophies in terms of, how to think about this. There's many different articles online, on YouTube. There's a plethora of financial planning tools that you can use to help you, assess the situation. But when a client comes to us and asks us this question, it really depends. It's what I call situational. If you start retirement benefits at your full retirement age, the amount you'll receive will be equal to your primary insurance amount. That was a term that we discussed before. But you can start taking benefits as early as age 62. Just know that, starting before your full retirement age will lead to a benefit that's going to be permanently reduced. So the earlier you start, the larger the reduction. Look at the chart that's provided here, so that way you can just have a rough idea as to what the reduction is if you start earlier versus getting the full amount if you wait later. But again, it's going to be situational, and there's a lot of different philosophies on how to think about this. Okay, so that's a wrap on what Social Security benefits are and how they work. Again, this video was meant to be fairly basic, not meant to get into some granular level details. I expect in future videos I will, but for now, I just want to keep it digestible, easy to understand, because a lot of this financial information, not only before I got into this business, but from working with clients, I know it can be a lot and there's a lot of different terms. So I just want to keep it easy and simple to understand. As a takeaway, I would suggest, and there's a variety of reasons for this, but go to the Social Security website, which is listed here, www.ssa.gov/my account. I'll leave a link in the description, and create an account, because this is going to show you what your primary insurance amount is, or the estimate for it, as well as what your estimated monthly benefits would be. And that will show you at different ages of what that amount will be. And I think that's important for a variety of reasons, especially if you're working with a financial advisor and planner. I know that we ask people to bring that in, so that way we can have an understanding of how these benefits work in conjunction with all of your other assets that you plan to use in retirement, and how it all flows together. So please give a thumbs up if you like this video, and subscribe, so that way you can get all of our future videos and education that we plan to deliver moving forward. We'll see you in the next one.